All right, guys, how is it going? Another day, another good day to learn. Just finishing up on paper after today. Um, and yeah, we'll get into what happened today. But again, some more gains on the account. We're up to 100 or 1,755. Again, I don't really focus on the money, but since I am trying to pass an account, I am focused on the money. So we made 208, which is really cool because that's the third time on this account I made over $200 in a day, which is kind of crazy because I've been trading this account for a while now. And I just haven't been able to put together like decent days. I'd say 200 is a decent day. I should be able to get bigger winners, right? Like some of my bigger winning trades happen on a day that I lose as well. So interesting to note that. But yeah, today was a pretty clean day, but a little tricky, and I'll go over a little bit why. Let me first bring over ES here, so we can have both, so I can kind of go over my bias going into the day. And let me go here as well. So my bias going today was a little bit mixed, but overall bullish, and I'll get into that because it was a little bit tricky today, in a sense that we didn't have a clean, we didn't really have a clean bias. Being at all-time highs, it is easy to be bullish. We also had SMTs all over the place going into the day. But anyways, here's what I'm looking at on the higher time frame on each chart. So I'm going to do the side-by-side again because it's a little bit easier to show you both charts, to show you how because I look at the monitor I'm recording on, it's just my webcam on my MacBook. That's why the quality is kind of dodgy. But I record on there, and that's where my ES chart is, since I don't really execute off the ES, which I've been saying this recently, but I really would love to start like executing off the ES, which just sounds dumb and it doesn't really matter, but I just miss trading the ES. Like I haven't traded in so long, because I don't really have much experience taking executions, especially not with inverse fair value gaps. I feel like the structure just plays out a little bit differently, so I really just use it for bias, which is perfectly fine. But get into the day of what I saw and why I was overall just kind of caught in between two. We have this high, which we kind of made equal highs with here, and then we had these highs, which I wanted to see get ran, even if we were going to sell off, right, to fill this imbalance. We had just hit, keep in mind, we have just hit sell side here, the equal lows. That's been the main draw in liquidity. So I was expecting something similar to this to play out, which I still expect to play out. Maybe today, tomorrow, whatever. I expect this to be sell side. But we've got to take into consideration, I'm going to go to the 1 hour here because why not? We've got to take into consideration where the ES is, right? So we see that this low is the same low as here. You can see the synced up. Okay, let me move this to where my face cam. But here, so this low here, and why is
I didn't get that.
Siri's going off for no reason, man. Okay, so this low here, as you can see, is kind of a matched crosshair. So it will move on this chart, it will move on this chart equal. That's why I'm doing the side by side, if you haven't noticed. Anyone that uses TradingView will know that, but this low and this low is the same, and you can see we swept out the low on NQ, creating a bullish SMT. So overall, it is bullish. That's why I'm expecting this market maker buy model to play out. But if you look here, this high, which is the objective for the market maker buy model, has already been taken by ES here. So we have a bearish SMT here. And I'll just fill out all these real quick. We have a bearish SMT. It actually came down to here. This is where we did it, but just to make, here, we'll do it obvious. So we've already taken out that high, but we've already taken out this low, which is the bigger draw. And we had the SMT down here as well. So this could get confusing for people that don't really understand it too much. But we have a lot of mixed confluences, a lot of mixed charts. And I'll just keep that over here. And if you also notice here, we have a draw on liquidity a little bit lower right here. But also, we have all these lows. So ES was looking a little bit more bearish because we haven't taken out this low. We haven't finished the market maker sell model to these lows yet, which I expect to be complete at some point. I'm not sure when. But we also have all these stacked lows, which, as you know, we have an SMT here. So it does mean that we don't need to take them right now. But ES has actually no imbalance to the upside. We were running through everything, displacing to the downside. We had already swept out this high here, which is the target on NQ. So it just kind of puts you in a spot where the market isn't completely aligned, which is completely fine, but that makes the bias a little bit tricky because on NQ, we were drawing in this 4-hour imbalance here on NQ. NQ's on the left. We had this 4-hour bullish for fair value gap, whereas on ES, we didn't have a fair value gap and we were closing a lot more bearish. We have this inverse that we are holding right now. But that's kind of, long story short, that's why the bias is a little bit mixed today, where I was bullish, but bullish structure did not have to play out because we technically have an SMT there. It doesn't have to be super efficient, and the market's not perfectly aligned, so you're going to see a little bit of confusion with the price action. But I do anticipate us to keep going higher, so we'll pull back up the NQ because this low resistance liquidity I still want to see ran, and we had the SMT down here in a very good spot, which is at the low here. And then also today we had a very nice area in which price respected. So if you can see here, these red lines to keep a note are the 4-hour imbalance. So from this, so the imbalance is on this candle. And if you notice, the red line is at the bottom. So it's just for me to see where the 4-hour bullish fair value gap is without having to have a big box. Because sometimes I'm not really trying to have a 4-hour box like this because it takes up a lot of space. It's just kind of clustering my chart. I don't really like having massive fair value gaps. I like using only drawing in smaller ones. So I have the fair value gap in here. And what I noticed was in the morning, because market open was right around here, we actually were rejecting a very, very nice spot because if you look at the 30-minute, this blue box I marked out there's a bullish fair value gap here, but we had an inverse fair value gap here. Inside, keep in mind, the red lines is the 4-hour bullish fair value gap. So this is a very high confluence area for longs. We trade into it in the morning at 9 o'clock for market open. So I'll scale down. So my bias was bullish overall. I was looking for a place to reject. We had been selling off. We have these equal highs here, equal highs here. We're in a bigger time frame market maker buy model on the bigger time frame. So that's kind of where my head is at. This is a very, very clean reversal after sweeping sell side, which is the red line, which again is the previous, I'm pointing the opposite way because my chart on my screen, this looks like it's this way, but then my camera, it's this way. So we swept previous liquidity over to this side, and we have beautiful structure showing the reversal, which is just why I am so bullish. But you got to look at internal structure. So this is what we're playing off of intraday, right? We could go here, but it doesn't have to go intraday. It could go tomorrow, the next day, whenever. We could just chop and build structure, which is kind of what we're doing right now, building up liquidity because we had a big sell-off, put in more buy-side liquidity, more buy-side liquidity, more buy-side liquidity, and we can see what happens. But anyways, going into the morning 9, we put in an SMT here. It was actually from this low to here was the SMT, but I just drew it in here because it's a little bit easier to see. As you can see on ES, going into the morning, we swept this low at 932. So 932 candles here. Notice how we don't take this low. So that's bullish. Inside the 30-minute inverse. So the blue box, keep in mind, is a bullish fair value gap and an inverse. And the red line is the 4-hour bullish fair value gap. So keep in mind also too, 10 a.m. is when the new candle starts for the 4-hour. So look at where 10 a.m. is. 10 a.m. is, I'll mark it out here, is right on this candle close here. So we have a nice reaction, a nice 62-point reaction. This is the tail of the fair value gap, the 4 hour. It trades all the way down and has a nice big reaction, showing that we rejected this area strong, which is very bullish, and closes. That was just something to keep in mind, kind of how you can read candles, and I'll show you on the 4 hour what I'm talking about. So notice how this candle closes at 10 a.m. every single morning. It's why there's a 10 a.m. reversal, macro, all that stuff, because the new 4 hour opens, there's a lot more volatility. The 4 hour bullish, we trade all the way down in the morning, and we close all the way up here. So we have a very nice rejection of this level, and we're rejecting again, which is really cool to see. So then going to the morning, that's again, just these are all the things I'm looking at to develop my bias, and just to read price and understand where price is going, because even though there might be a short setting up or whatever, I'm trying to align the higher time frame draw with the internal draw, to get the most accurate reversal, right? Because we were selling off, selling off, selling off. How do I know that this is going to be a reversal? Well, we're in a very high confluence area for longs. We put in an SMT, and we start breaking structure and displacing through highs, because we break structure to the upside on the 1 minute right here. We break structure right here. Let's just put it on this candle. So we break structure to the upside here, which is the first time we've displaced through a high. We have a very high confluence bottom, and that's just how you can start seeing these things live and be like, oh my gosh, this looks like the bottom. And I was very confident, and it just takes time and experience. So don't worry about that. But then we pump up, we create a 5 minute imbalance, which is the first bigger time frame imbalance we create. We create it right here, a 5 minute bullish fair value gap. So 5 minute bullish. So we create that fair value gap, and a very interesting place that we were looking to trade into was this 1 hour bearish fair value gap, which we are currently rejecting. But this 1 hour, we have a few imbalances here, but notice how the market rebalanced to the efficiency and rebalanced to this inefficiency, which is all the market does. It hunts liquidity, it hunts inefficiencies, and it hunts equilibrium. That's something that Justin preaches. I do recommend his channel, but and this is just the market doing exactly what it's supposed to again, which it just always does. There's no such thing as bad price action. The market's always doing exactly what it needs to do. You just have to be an observer. Right now we are bouncing out of this 30 minute pretty solidly. So I'll just keep that in the back of my head. And we probably got a few setups. No, we didn't. But I'm so glad I don't trade fair value gap taps anymore. I don't want to get off topic. So we're going to the trade, all these confluences for longs. Again, the break of structure, the clear sign of reversal at these different key levels. And then the 5 minute bullish opens up. We had news at 10, which was right around here. Perfect. We come down, we put in equal highs here. We have the 1 hour, which was the drawn liquidity. We also had this fair value gap that we retraded into. We come down, we put in this low again. We have a nice reaction. That's very nice to see a reaction like that. We even fill this small imbalance, where I'll zoom in here. We even fill this really tiny imbalance on this candle right here. You can see it's kind of a very small fair value gap. We barely take it. It's nothing that you should really be concerned about. But anyway, so we get this, and as soon as this candle broke, I jump in a long, and let's see. My first take profit was this high. Let me use the trend. Was these equal highs. I took 3 micros off here, and then I put my stop to break even and was targeting this high. Full transparency, this trade ended up, what's it called? It ended up, since I trade micros, it ended up filling me in a weird way, which this high was taken on the micro chart before it got taken on the full NQ contract. So you can see on this candle, it didn't take the high yet, and I'll zoom in a little bit. So this candle here did not take this high, but on the NQ, micro NQ chart. So this is the 1004 candle. And if I just pull up the NQ, MNQ, let's see, the 1004 candle right here. This is the 1004 candle. Notice how the 1004 candle swept this high at 1004. We took out the high here. That just wasn't the case on the 1004 candle on the NQ chart. And that's a problem I ran into for the first time. So what happened is I ended up getting stopped at break even because I just put a few points in profit, the break even, which again, I need to know if I should do that or not. I'm kind of just experimenting because of the commission spread. I always just put my break even about a point or two higher. And today it stopped me out to the tick and then reversed. But if I didn't get stopped out there, this was very beautiful because we hold this, we hit the first take profit, which is the break-even point. We would have never been stopped at break-even, and we would have hit the second TP. So because of the NQ having different spreads or different numbers slightly, which again, I never notice, and I'm not complaining because I have to trade micros right now for my psychology, and just that's the size I trade and feel comfortable with. But it is frustrating to have missed out on an opportunity because of just the micro chart being different. So I'll pull up that execution like I did in the last video at the end of this video to show my real execution live time. But then we come in and we finally hit that 1 hour bearish, and this is actually a pretty nice area to reject. I again wasn't looking for shorts because I'm just bullish overall, and I just took a trade. I'm not really trying to just instantly go into a short, but with the momentum on this candle, it's actually a solid short. Again, honestly, I wasn't really paying attention to taking this trade because I wasn't really looking to trade right away, and I just am bullish. So these equal highs up here, this green line is equal highs, as you can see right here, and I just wasn't fully bearish. And wow, this is a beautiful thing we'll get into right here at the end, the pump. But yeah, so we get in. This could have been an all right trade because you could go to break even at this low or this low here. You go break even, and you could target this low down here. Again, I'm just not bearish on the day, so it just wouldn't have made sense right after a winner to take that. But we don't have any displacement. We hold the 5 minute. We inverse this, and we make a fair value gap. We come trade back down. We resweep this internal low. We resweep this internal low right here inside this fair value gap. And when we inversed here, I jumped in a long. This is my second trade for the day. It brought me up another 100. And I kind of I'll show the execution. I held good. I put my stop around here, but I took profit at this high, and then I kind of just took some off here. It was really a scalp, and it would be fine if I got stopped at break even on the rest of these. It's still not a bad trade. It's just a little bit of it's just a little bit too eager to place a position, if I'm being honest. It's not my favorite trade, but it worked out, and it's an all right setup. It's very high probability to this high, but it's just a little bit too scalpy for my liking. And then I went to paper. I was expecting this inverse to play out. Not really sure. I think ES is just drawing lower because if we pull up ES, ES was holding this imbalance nice. We had an SMT here at this high, and then we sold off to make another SMT, which we have here, and I'll go into that. But then, yeah, so then this short ended up playing out, which isn't really short, to be honest. Like, it's not really a trade because we have bullish structure. We're rejecting this area here, but again, it's just one obvious reason why this is just not a trade. I took it on paper, but it's just not a trade that I would take on live account because look at this candle close. Notice how if you're going to trade IFVGs, this is really important because even though this played out, it's building false conviction because it's just very dangerous to trade this. If you're inversing this gap here, right? You do not want to see this candle close. You don't want to see this low get taken before this candle closes, right? If the candle closes here, around here, great, because now this low is the draw on liquidity. Whereas when you inverse this and you already hit this low, since you are bullish, like you've already taken out a low, and it's just lower probability. It's a lot more dangerous to take that setup, and you will get burnt a lot more than it'll really help you. And that's just a good way to avoid taking just really bad trades. And again, I took it on paper because I thought the draw was lower because of it. But if you're trying to risk a live account or a real account or just whatever, you're trying to take only good setups, that's a setup I would definitely advise to avoid because we hit the low on this move. But it played out, and we get a beautiful SMT. A reason I say I'm so glad I don't enter off fair value gaps anymore is because I was paper trading, and I was going to enter off this fair value gap, the target higher. And both times, I was like, okay, cool, we'll just come back down. We'll probably revisit this. But we got a tick away on this black candle to tap me in, and then we never got back down there. And look, we ripped a buy side. So this trade was 84 points, and you missed out on it by a tick because of you enter off fair value gap tap. So and then if you miss this entry and you enter off this fair value gap, you just got wrecked because you're not going to have more than a 25-point stop loss. Maybe put under this low if you're being crazy. But I just am so glad I don't trade fair value gap taps anymore because it was just so hard to do, and it's just all what you build conviction in and what you see and how you see it. It really doesn't matter what you trade, but it is just so hard to trade taps because what happens when this thing you're about to get filled, your market order's there, because my market order was sitting to get filled, and it rips 30 points, and then you're like, oh my gosh, I just missed that. So then you try and enter on this fair value gap, and then you get wrecked. And then you're like, okay, I'll re-enter on this one. It doesn't tap. And then it goes up and hits the take profit. Mentally, you are so exhausted from seeing that and just getting abused by the markets. And I think that is why so many ICT traders fail, is because ICT traders, I really believe, only fail because they really, really struggle with their entries, right? The concepts work, the market moves how it's supposed to, but some people just cannot understand for the life of them why certain entries are good, when to take certain entries, when you're getting catfished by an entry. There's so much intricacy to it that people can just write off ICT concepts. I'm not even like an ICT fan. To be honest, I don't even really watch ICT. I've seen some videos. I feel like everyone that trades some ICT concepts has watched some of his stuff, especially everyone talks about the freaking 2022 mentorship, but I'm really not an ICT rioter, to be honest, but I've learned a lot of ICT concepts, just the basic ones like fair value gaps, SMT, liquidity, stuff like that. So going into that stuff, really, it's just so hard to. There's certain concepts and ways to enter that are just so advanced that you need just such good price knowledge, that just so much experience. Inverse fair value gap is probably the easiest and most beginner-friendly way to trade. I really like it because I've just found a really good consistency with it. I really like the way it works. I understand it. It's just easy for me, but it is definitely the easiest concept, I believe, to trade on ICT because it is so black and white and you never miss entries and stuff like that. But there are so many better ways to trade. But I would say, honestly, starting out, IFVG is the most beginner friendly because anyone can pick it up, right? Anyone could have taken this trade, right? And you could have no idea why you're taking it. You could have no idea about price structure and take that trade and win. Anyone could have taken this trade. There's not really many trades there's a lot of trades. This trade would have failed, but every other trade would work, right? And IFVGs, it's just so beginner friendly, but and that's how I'm gonna trade for now. But I do want to just keep getting better at just understanding price, right? So me trading IFVGs is just helped me get live experience with some success. But I'm really just learning price action. I'm learning how to read the charts. This SMT, okay, we have displacement up. We come back down. Let's see if we tap a bigger time frame fair value gap. We hit this 3 minute here. We reject off the 3 minute. Price action is price action is price action, right? There's no hidden secret. There's no hidden gem. There's no whatever confluence that is just the best. It's just all reading price action. The same way that I went through, this was basically a top-down analysis from everything, and just you've got to realize that this is not going to be how you trade right away. This is not how you're going to be able to read price right away. This is taking me almost a year of spending hours every single day, and I'm still nowhere near where I could be, where I should be, where I will be. Nowhere near it, but it's just, don't get down on yourself, because you just there's just so much to learn constantly, and there's just so much experience to learn, and just keep reading price action, keep understanding price, just try and keep learning. And that's really all trading is just understanding price action and making decisions based on that. So another good day on the funded. Really hoping to pass this account, man, because I've never passed one, and I'm just really excited that this one's been going so well. So just gotta keep carrying the momentum, good vibes, good experience, and just get over the line with this, and then we'll reevaluate. I'll make a video just explaining kind of where we're at, if we can pass this account, when we pass it, whatever the case may be. But we have a lot of work to do between now and then. But yeah, so I'm really appreciative for all the people that tune into these videos again. We got last day of the Euros group stage. Spain are looking good so far. Germany look good as well. The Spain side of the bracket's pretty crazy, but I'm really excited for the Euros, and I'm not really sure what I'm going to do with myself when the Euros ends, because that's just easy thing to do. But not going to keep you guys super long. That's all I really have for the charting session. I think this was actually a very valuable trade recap. Oh, I mean, I have the executions. This video already long, and the games have just started. Gosh. How long has this video been? Is there any way on 26 minutes? Yeah, this video is already 26 minutes. I could show you the executions. I have them right here. But let's see. Shoot. Okay, so I'll just show the execution real quick. Why not? It's only 3 minutes, so let me move this over. So we entered the trade right there when the candle closed. We entered, and then started moving. But then let's just go to the part that tripped me up. So we were in a little bit of drawdown. We start pushing up, and watch right here. You see the 5 micros. Well, you see the 5 micros here. Let me get my mouse up here. You can see it's probably hard to see because if you're watching this on like a phone or something. But we have 5 contracts right here, and we're up around $100. And then boom, right around here, it takes out 2 of my contracts, or 3 of my contracts, and yet we didn't take the target. So I was a little bit confused. I was thinking maybe the same thing happened with my contracts. But this was a pretty easy trade, pretty much 0 drawdown. But again, proving that I actually take these executions to show you guys. So then I was checking back and forth. I was like, okay, where did I get filled? And I looked, and I got filled at 2,000, right? Exactly 2,000. So then I went back to the chart. I'm like, okay, where's 2,000? It's right above this high. I'm like, what the heck? Like, it hasn't even hit there yet. So just, you can pause the video and rewind. Like, oh, I'll go back. My execution, look, it says sell price right here, 2,000. Buy price, 81.50. It's sold exactly there, 3 micros. And I was like, what the heck happened? And again, I showed you guys the micros chart is a little bit different, but that threw me off. That was frustrating. Then I went back, and if you see on the chart here, over in this corner here, I'm trying to make my mouse, it says 19,9999.275. So the 2000's right above that, a tick above, and we are nowhere near that. So it was really throwing me off. And then I end up getting stopped on my 2 micros at break even right here, which I shouldn't have been at break even yet. So it was just really frustrating. That was the first execution. And then the second execution, we'll show that real quick and try and keep this video under 30 minutes, which probably won't happen. But the next execution, again, 8 seconds till close. The candle closes right here. We got in. We have a little bit of drawdown, I think, on this trade. Yeah, a little bit of drawdown. I wasn't too concerned because that reaction was good. We hesitate for a little bit, and then we hit our first take profit here. And then let's see how we manage this. So we took 2 micros off there. and I was gonna leave mine on the run. I put my stop at break even, and then I just kind of exited the trade for no real reason. This 1 minute fair value gap right here, I kind of just exited when we got a little push up. I'm not the most upset, mainly because it would have stopped me out of break even anyways, but also because it just wasn't like the worst area of the scale. I mean, I would have liked myself to have held and try and get here, and rather take a stop at break even in the long run. But that's my second execution for today, and that's all I got for you guys. So thank you guys for watching the video. Hope you guys did well. Hope you guys are having a great day. Do something fun today. Get outside, be productive, be healthy. And I will see you guys tomorrow on Thursday. Let's finish out this week good. So peace out, guys. I'll see